Well, mounting questions about recovery for the U.S. housing market, especially in some of the hardest hit regions across the country. Mortgage lender Quicken Loans CEO Bill Emerson joins us now. Thanks for being here.
It's my pleasure. How are you?
I'm good, thank you.
Good.
And I wanted to get to what you're seeing in your lending products right now that is telling you where the market is, because the latest housing data we got was anything but encouraging.
Well, I think that's true. I don't know that there is anything really encouraging going on out there. People right now are looking for 30-year fixed. Rates are very low, and so that's a very secure thing. And that's the majority of what people are looking for. They're looking for either an FHA loan because it helps them qualify, or they're looking for a 30-year fixed conventional. There's a few ARM players out there, but not too many.
Well, let's talk about ARMs for a minute, because I was reading an interview you did in 2005, and it was fascinating because the journalist asked you about OptionArm Loans, saying there's some concern about these products now. You, at that time, 5 years ago, were very skeptical. You said, I'd say they're about 1% of our portfolio. I'd say they're only right for few people. So I know your numbers aren't public since you guys are privately held, but in terms of the hit you took from OptionArm Loans, I mean, you were cautious then. Did you continue to be cautious?
We were always cautious about that product. And frankly, we're cautious with any product, because at the end of the day, what we're trying to do is match the product with what the client's needs are and really understanding what those needs are. And so I think what sometimes happens is, especially with what happened in the OptionArm world, people take a regular adjustable rate mortgage and they throw it into that bucket. Right. And there's still a very good use for an adjustable rate mortgage for folks who know what they're doing, know their their time frame financially, and there are still people taking those today. Not option arms, regular arms.
Regular arms, but much more cautiously.
Absolutely.
When you look at the trends right now in the U.S. consumer, I don't know how much interaction you have day to day with the Quicken Loans consumers, but what are your employees telling you about what the customers are saying? How concerned are they? Have they turned a corner? Are they willing to make a bet on the real estate market?
No, I don't think they are. I think there's still a lot of hesitancy out there. I saw an article yesterday. There's a $1.2 trillion worth of mortgages that are at 6% or higher, that people are not moving right now. They're still sitting back and waiting on the refinance side. On buying a home, I still think people are waiting to see our price is going to go down any lower. If I buy a home for $200,000 and 6 months later it's worth $150,000, I don't feel real good about that.
So how does Quicken alter its strategic approach then when it comes to keeping its business moving, keeping it profitable?
Well, fortunately for us, we're a centralized platform. We can work in all 50 states. So when we take a look at our numbers, we're still only about 1.5% of the market. So we still have a lot of opportunity.
Quicken is based in Michigan,
That's
one
correct.
of, I would say, the hardest hit state in this crisis, any way you slice it. And what's interesting is you're moving your headquarters down into downtown Detroit, a place where we've spent a lot of time, out of Livonia down to downtown Detroit. Why are you making that bet on Detroit right now?
Well, I think we're part of the community. We've been a part of the community for a long time. Dan has grown up in the area of Detroit. His dad actually had a business in Detroit. And I think it's just a way for us to help the city. We're taking about 1,700 people downtown. I think that will help the area that we're going to be in. And, somebody has to make a move to help Detroit move out of manufacturing and into a different economy, into whether that's a brain economy or whatever you want to call it. So, do
you see bigger corporations moving more of their industry into Detroit? Because that is what we hear from the policymakers in Detroit. That's what we hear from Governor Granholm in Michigan. But that's a question: are businesses willing to take the risk that you're taking?
Well, we're hoping that by us, doing that, we'll get some more businesses to come down there. There are businesses that are down there, but certainly there's more that can come down, and we're hoping that by us going down there, we just kind of blaze a path.
Former President Bush spoke years ago about the wanting by the end of his administration to have every American be able to have a home. That was the dream then. It turned into an American nightmare for many people. Would you agree that the face of home ownership in this country has changed for the long term?
It's certainly changed, I would say, at least for the next 5 years. I think a lot of the home ownership goals and trying to get everybody into a home had a little bit to do with some of the lax underwriting guidelines that took place.
Maybe a lot to do with.
Yeah, when you're trying to do responsible lending, you're also trying to make sure that people are getting access to mortgages. There's just a balance there between who can actually qualify for one and who can't. And I think we learned a lot from that.
And not everyone should own a home.
No, not everyone should own a home. I mean, at the peak, it was, 70% home ownership, and that was up from probably 62, 63. So it's probably in that 65% range somewhere, again, depending on economic environments.
Yeah. Your outlook for the next 5 years for housing, do you see an inflection point here?
Well, I think that, I don't think we've totally bottomed. I think the next 5 years.
You don't think we've totally bottomed?
No, I think in some areas we have. I still think there's some areas where we have some work to do. I think there's a lot of inventory out there that's not necessarily showing up in all the inventory numbers, stuff that banks are working through in the loss mitigation piece.
Commercial real estate?
Commercial real estate's a whole separate issue that's happening right now. So I think housing over the next 5 years is going to be, it's going to come back. But I don't think you're going to see massive price appreciation in the next 5 years. I think it's going to stabilize and hopefully start to slowly grow.
Buy a home to live in it, maybe not as an investment for the short term.
Yes, I think that's great advice.
All right, thanks so much. Appreciate it.
Thank you.